All right, I'm going to go ahead and start recording because I've learned not to think that interesting things happen only when we say, okay, go.
Hello.
Hello.
Hello there.
Hey, Mitch. Hey, Sam.
Hey.
Hey, John.
Hey, Jeff. Hey, Brian.
Hey.
Hello, citizens. That was more fun for me to say than I thought it would be.
Oh.
Do we need to cue the crystal before we do anything?
Yes. I mean, need. Spiritual Bro says we are making space to gong the crystal of manifestation. Hear ye, hear ye. The manifestation crystal has been set down.
So, Jeff, Brian, maybe you can set the frame, and then I can talk about a polarity, and then Jeff can talk about process.
Yeah. So, first of all, would we like to stream this? Because I would like to stream this. Okay. Anyone? Any dissenters?
You can record, but not stream.
Oh, fine. I just got hardwired internet.
Ooh.
It's going live later. Anyway, this conversation is a conversation to create a financial model for the One Inc. Cooperative. The One Inc. Cooperative is a frame, a story. It's a contextual wrapper for things that John and I have been playing with for over a year now, Jeff as well, Sam more recently, and Mitch very recently. So all of these things that we've been playing with, talking about, and kind of seeing where they fit in and connect together, the largest thing that we have been questioning is like, what's the highest level story in which they fit, that doesn't, change the intentions or create issues in the future and all that jazz. For me, it's a journey that's been much longer. It's a journey that started with a desire to have a space to create and play before I had that language. And that was later contextualized when I read Richard Branson's biography, where he talks about how Virgin is branded venture capital. And One is very much structured for that. The brand One is designed to be able to spin up a bunch of different things, and Mythos is designed to be able to communicate these spin-ups. It just so happens that it totally makes sense that this be a cooperative. It just so happens that when we realized that we went looking for the documents and found that in 2015, the state of California passed a statute to basically make the law more friendly for a workers' cooperative, which allows us to have a member-owned, member-controlled cooperative and have up to 49% of that entity be owned by community share investors. John, before you share, can you unshare for a second? So I have already.
I love the constant pursuit of wrangling John in by everybody.
If only technology had been made. So I've already started creating this financial model, and the only reason I was able to do that was because this is Jeff's financial model for show one with everything deleted out. And what I started doing over on the left side is basically taking everything that we have, and this is probably half, this is, I would say, that the top of the pile, everything that we've discussed and kind of solidified. So at the top, you have citizenships, and the cooperative is largely structured on, okay, purchase a citizenship. So most cooperatives, it's like very reasonable, like $30 a year. The aligned citizen is basically that $30 a year level. And what that $30 a year membership allows for is to be considered a citizen and to receive our dollars. So in order to receive our dollars, or points, our ecosystem within, you have to be a citizen. And in order to be a citizen, you have to go through our application process. And once you become a citizen, you get to receive our dollars. The second is preferred citizen. Preferred citizen is basically someone who has access to Slack. Within Slack, you also get an allowance of our dollars. Within the week, you will be able to exchange these in Slack. Meaning that if someone says, thanks so much for introducing me to so-and-so, you can actually give some of your R dollars as social capital to another citizen. Founding citizen is basically everyone who's presently in Slack and a batch of other people who will pay for the ability to later have a badge that says that they were a founding citizen. One Signal is the live stream and the Tesla Talk Show, both of which are platforms in which we can shine light on our citizens, talk about the cooperative, talk about the projects within the cooperative. It's basically a public broadcast system for the cooperative. One Masterminds. These will be breakout groups where people can talk to people of stature with experience and get guidance. There will be a number of those. There's a number of different ways those can represent. One Platform. This will later become the space where you are able to see your R dollars that you are earning, how many you have, what the member services you have access to. So basically a dashboard for your membership. Within that, you will be able to see your technologies. So One Plus is our human augmentation solution, which we are basically offering to citizens at cost, and then selling to non-citizens at a order of magnitude higher, to simplify. Mythos One, which you all know, Citizen Technologies. So Citizen Technologies, people like Justin Lane, who has created an AI that is capable of ingesting data and then basically becoming a generative AI very simply. He has gifted Spirit Studio Incubator or some frame of story within One. He has gifted equity for us to share his story and basically do commercial sales, something that we are uniquely suited to do, both from a story perspective and from a technology perspective with Mythos and the Resonance Machine. Resonance Machine is not on there. And so, and One Space, which Jeff has already done an individual financial model for, which will be our physical property where we can host gatherings. And you have non-recurring revenue like One Context, which is basically the build out of context in Mythos so as to promote citizens. Kind of all of you have seen John's memo, which took me probably 40 minutes to write. Basically, One Context is that service, an interview and contextualization service. One Gatherings, you all have attended some of those and been part in making them. So that includes Symposium, Future Self Party, Tipsy Tours, Union Retreat, which we'll talk about another time. And then One Sponsorship, which will be sponsorship of these things, which again was tested in Future Self Party. So, and then also One Ledger. I've kind of just started mapping these out. These are all the things that we have talked about that we are in some frame present in doing, but now that we have the frame of the cooperative, we know how those things can interrelate. And the purpose of this call is to construct that in numbers.
Awesome. Is there a way that we can get access to this Google Doc?
Yes, there is. It was kind of sort of a surprise, so I didn't share it. So, I will post it for the sake of ease right now in the Zoom chat. There we go. All right, John and Jeff, I will let you take it away.
So
let me pass it off to fellow board member John Sanowski, the former CFO of Second Life and General Assembly, who is, yeah, I'll insert my pitch, but keep going.
To simplify this, and to kind of, go from, I think the highest level is, we filed articles of incorporation and we're telling this story. I think it's a huge story and I want to dedicate my life to it. And we have our operating burn right now nearly consists of $10,000, which is a combination of Brian's salary and the expenses of the business. So basically it feels like the fastest path to covering that is memberships and people buying community investor shares, basically memberships and investors. And then, we've had opportunities for enterprise sales, but those seem to take longer. And so,
John, can I redirect you upwards? That this financial model is the financial model for the cooperative as a whole, not a stopgap for generating revenue. This is the all-encompassing, and obviously that all-encompassing financial model will contain things that are represented in a physical reality with dollars in more quickly than others. But this model is all-encompassing. So that's, I feel like that's distracting context.
I understand that it's all-encompassing, and I like you keeping it at a high level, but we have to fund these expenses. And
okay, can I challenge the but and the have to? The purpose of this is to create a vision for the future in finance. So let's stick with that, and then anything that's more short-term we can get to after.
So then one of my goals after you do that is to do scenario analysis and make sure that we.
Then let's keep that till the end.
I'm just setting context for everybody else.
Okay, well, cool. So do you have anything else to add on the cohesive whole
push it to
of
the end, but I'm bringing it up now because I want to be clear about scenario analysis and make sure we're covered.
We discussed this yesterday. I'm uninclined to go deeper in on it, so let's move on to the next topic. Jeff, do you want to jump in? I see you already editing.
Yeah, I'm already playing. So I want to understand the frame a little bit. Can you guys hear me?
Yeah.
Okay. I want to kind of reset because like that conversation back and forth was hard for me without context. So like the goal here is to paint the vision for what we think One Inc. can be in the future from a financial perspective.
And make a plan to get there. Those are the two that you guys were discussing.
That's exactly yeah, and I think
Brian, you're leaning towards the first one. John, you want to address the second one at some point?
Yeah, and let me jump in and give some added context because I think John, what I would say feels like scarcity of what John's throwing, which is very reasonable. And obviously, like there are physical things in the physical reality that need to be addressed. John and I only within the last 3 weeks realized that the frame of a cooperative with an value exchange system was the story. And so we have John and I have over a year of context of things that we can do in some timeline, things that we have done to some degree. And that's John and I for the last year. And then I have been working towards this since 2012. So this for me is a spreadsheet where everything that we've always said that we can do will be put, because I have been wrangling John in the same way that, in an opposing way that John has been wrangling me. This is why we kind of create this balance and harmony since we've met. And so my intention here is to map everything out so that we can see all the things that we are doing in some frame, and then we can order them based on the status of manifestation. So for example, one space is let's raise $5 million, buy a house and turn it into a live co-work space. Jeff already did the model on that. That will be profitable by month 3. We need to bring in $5 million and build it out. So that's a big expense and a heavy lift. So that's something that we know we will do in the future. Alternatively, on the other side, so citizenship, I am presently, it's open on my other screen. I am presently creating a new, all of you have gone through the immigration form, and you got to a point where it said you can invest whatever you can pay for whatever you like. That was an intermediate step. I'm currently clearing that out and creating a paywall. You have to pay $33 to join as a citizen. You have to pay probably $111 to join the Slack. If you join the Slack, you get an allowance and you can give our dollars. Everyone who comes to Symposium gets our dollars, but in order to claim them, you have to be a citizen. So those two functions right there are things that will become real in the next week and will enable us to take all of the people that have been a part of this story in some frame for the last year plus and say, hey, all that stuff that we've been, playing with stickies on the wall, this is what it manifests as. So I feel less, I feel abundant because now that we have that story, we have a very clear path to figuring out what things manifest first. And this model is for me, okay, cool, let's list everything out and talk about it in numbers. So John, I totally hear you on scarcity, or not scarcity, that was a Freudian slip. I totally hear you on modeling.
Let's agree to call that the polarity, and it's a beautiful polarity.
Yeah, I like one foot in one world, one foot in the other world, and an acknowledgement that we are presently in one, moving towards the other.
Perfect.
I appreciate you. I appreciate you keeping us grounded.
Jeff, maybe you can talk about the process and kind of how this works.
Yeah. So I guess we can plan on running through each one of these and painting the vision for what the future is. The process itself is essentially a feedback loop that gets created over time. So we make a plan, we measure results, and we see where our plan is off so that we can face reality, and make decisions based in truth and not other factors, which I think this group is probably already well on its way, making decisions not based in emotion and blind hope and like a bunch of other things that I've seen entrepreneurs do, and that's obviously by frame from the financial standpoint. So I think what the best approach we could do is we could all paint a vision of what each one of these things could be realistic, and hope that we set the right timelines for each one of these. I love the idea of painting a vision for each one of these things in order to prioritize our focus to things that I would argue are freedom multipliers for the wanting community. I love that frame, and Brian, hopefully I understood you correctly when you mentioned that, which is like, let's look at everything we have on the board and see what's currently being manifested and what's currently being worked on. I think that was a great frame to prioritize.
Yeah, and
effort,
you look at
and energy.
Yeah, and just a granular example of exactly that is that 1+ is super awesome. It's easy to get people to look at. The status of the technology is such that it is a heavy-handed natural capital lift to bring someone else into it, to duplicate it, basically. And so it's really great at gathering attention. It's not presently structured from a technological standpoint to gather capital. And so we can use 1+ to gather attention and convert that into capital elsewhere. So that's the benefit of all of these things being on the same model rather than different models.
Mm-hmm. Yeah, I like that a lot.
And then a piece of data that will inform this, Jeff, would be if you expanded the key metrics. Or Brian, I don't know whose screen is sharing here, but the look at row 2 and expand that. So one of the things.
This is, I haven't, and for context, I haven't edited these since it was show 1.
Right, so you can collapse that but make space for basically what is the size of our database. Yeah. Of people. And that, then it comes down to memberships will come down to a conversion rate, and we don't know.
1376 is that number, Jeff?
You understand? So that's our database that he has in Context Plus.
So can I get rid of this?
Yeah, that's all that I copied over from the podcast model.
Brian, I just like we put those things in January, February, and I'm only saying that so that you understand the feedback loop, right? Does that make sense?
What do you mean by that?
Based on the plan, this is going to be a weird thing to say, and I don't mean to interrupt us. I'm going to move right past it. So just know that I'm going to move right past it. But we were planning on doing 20 guests in January.
We modeled that. No, we modeled that on the basis of when show one, the Tesla Talk Show, manifests then, and we did not.
There was a different.
We did not finance
the
Tesla. Well, but that's the thing is that we didn't finance the Tesla, so we couldn't sell the space within it. And so this income statement is like, okay, some stuff requires us to buy before we can sell. Other stuff we can sell before we buy. Memberships we can sell now. OnePlus we can sell, but then it requires a lot of energy to fulfill. So we can gather attention with OnePlus and sell citizenships. And so that balance in the income side so the metrics are going to be fun to propagate. But yeah, yep. So that's the conversation. It's like, what does it take and where are we at?
My only point in pointing that out was just to that is what this is for. See where we're off in the future. So I'm beyond thrilled that we're doing this. So database subscribers, or just database of
just database.
Cool.
And call it our email list. Those are the active subscribers.
Yeah, well, I mean, so there's 1,300 records in my database. About, I would say, 600 of those are subscribers. The others are, I would say, 600 citizens. Yeah, let's just call them citizens because they've subscribed to something. So 600 potential citizens because they're not aligned yet. 600 potential citizens, and then an additional 700 friends of resonance, which are basically people who are present in the frame but not yet taken the step of committing to something. In addition to that, I have another list, which let's say also friends of resonance of I think 1,500 people. Those are from Ghost Influence. Then Deepen, they have a list of 1,400 people in Los Angeles that they've allowed us to speak to. So that's another asset that we have. We also have technology for speaking warmly to cold people, but we can leave that off. And then Reddit, which we'll leave that off. So
So it's probably we're probably good to just measure the 600 and 700, I would argue. The rest are opportunities to widen that network, right?
Yeah. I'd say friends of resonance are people who are listening, like people who are subscribed to the email list but haven't taken action. So let's just narrow it and say, for the sake of this, friends of resonance and aligned citizens. So friend of resonance, 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 not resonance. You're good. Friends of resonance are basically subscribers. Aligned citizens are people who are like, I'm into this, let's do it. So some kind of commitment, be it attend an event, buy a product, buy a there's literally any action, is someone who is participating in the cooperative. Those have been my two metrics for a while.
Okay. Got it. Okay. So what was the other metric? Did I miss something? Sorry.
No, I mean, we decided to leave off total addressable market.
Right. Gotcha.
Because that could be very challenging to address.
Okay. So
then within aligned citizens, you can, a sub bullet of that would be writers on Mythos, preferred citizens being people in Slack, So if we're doing future metrics,
Do we?
no, that would be under aligned citizens. So friends of residents is literally just subscribers.
No, I know. Yeah, I'd urge us to not try to measure too many things and keep it as simple as possible in the short term.
Okay.
So like,
Ultimately, don't we
down.
want these lining up with revenue items?
Yeah, I appreciate that frame, because I was just about to say exactly that in a very different frame of language. Yeah, so my eyes went to the one mastermind. So people paying to access a mastermind will be something like $1,100 a month. So obviously we'll have, that would be a key metric.
So, okay, so you got this database of people, and let's call those prospects. I know that this is not.
No, that works.
Reach. John, help me out with the language if you can once in a while. But like this, this stuff is great. And then I would build out like each one of these, if they're recurring membership type things, we can lay out, what their, what the well, yeah. And I don't even know if I would put it like that, at least like, because I don't think we have nailed down our funnel exactly, and we don't need to know the funnel. It's just like, do we know which one's going to start?
I do.
Sooner? Well, I know. Sorry, this gets interesting for me. Okay, like for an example, let's start with one of these. Do you want to do the mastermind?
Yeah, I mean, because the question I have right now is what from the mastermind represents in the key metrics section, like. Because it's in the income section, shouldn't we also, and again, your expertise, should we put it in the key metrics section?
If so, I would say yes. Like the income section will be the dollars, on the P&L, and then let's drive those with, a simple version of the key metrics, which are like new members.
Yeah.
We did this member and the members, recurring. What, John?
It's great, thank you.
Total members. Like I'm even going to throw a little churn rate in here so you guys just know the process, and then average revenue per unit. And then we'll just basically copy this section for each one of the revenue streams.
Right.
The issue, the issue that I want to, the issue is not the right. I would like us to keep this stuff wildly simple, because as we get going and as we get subscribers in each one of these things, our attention will break down them further in the key metric and the data, gathering and all these things. Like this database, like this is probably the one piece that I would want to break down and start putting together. Okay, how are we going to grow this? When are we going to grow this? Because this leads to the opportunity of all the other ones.
Yeah.
So like I'm actually like, based on the process, we probably should have broken down that one by week and had a plan around growing that already. You know what I mean?
Yeah, that's next. I agree.
Can you? Okay. But yeah, let's put that to next.
There's no rush on that. I'm just saying like the process would dictate that we would start measuring that one first and breaking it down and getting the feedback loop faster than the other ones that don't essentially exist yet. But the moment that they start then we may want to model out the funnels of them, right? On the whole, add details. I'm just saying in this discussion, I'd like to keep it as simple as possible, and you guys tell me.
So my intention for this, and I think what John and I talked about yesterday, and I'll use Mitch as an example. One, gatherings are presently dominated by Symposium. Symposium is free it's free or donation based. We've done paid stuff. That's not my expertise. Sam has conveyed that he wants to step into that. We newly have some ways to sell sponsorship of those gatherings. One gatherings to me is like a little further out from manifesting sizable capital that's not self-sustaining than it is presently self-sustaining as Symposium. It brings us people like Mitch and creates alignment with people like Mitch is a great example of like came to say, hey, like I feel this, let's play. So the two metrics that call to me most are the preferred citizen, the preferred citizen and the mastermind and/or founding citizen. The founding citizenship might include a mastermind. Those two things. So preferred citizen is like $111 probably a year. That's kind of, I haven't gone too deep in it. And then the mastermind is probably $1,000 a month. So those two things are the things that we can sell as of probably 3 days from now. We have the story, everything's ready. Everything else can come quickly thereafter. But those are the things that seem the most simple, the most clear, and the most tangible.
Hang on, can I ask a question?
Yeah.
Okay, so we have 3 different citizenship statuses. The aligned citizens are paying the smallest amount?
Yeah, that's just the raising your hand, paying the membership due, $33 a year.
Okay. The prefer and what do they get for paying that? Because they are aligned citizen.
They get access to the citizen broadcast, so AKA our email list where we talk about the inner workings of the cooperative and take votes from our members.
Okay.
So basically the intention is we want to make the bar as low as possible for someone to give us money and bridge the gap of belief of like, I am a part of this because I have paid money. That's for me, that's my intention of the aligned citizen level. So they pay $33 a year. They get access to the email list where we survey our citizens for like, hey, this is what we're doing. What do you think? Or put this to a vote. And then the step up from that is the preferred citizen, which is every time someone receives an email from Aligned Citizens, like join the conversation in one place by becoming a preferred citizen, upgrade your membership.
Okay.
For Aligned Citizen, they get access to the email list, they get status as a citizen, they get access to the citizen broadcast, and they get the ability to receive and collect our dollars.
Okay.
As a preferred citizen,
wait. Don't get ahead of, we'll move on to that next.
Okay.
How do aligned citizens interact with masterminds and gatherings?
They don't.
Do they get preferred pricing? They're just buying at whatever general admission is?
That makes sense. I haven't gotten there yet. So yes, it makes sense that if you actually, like the co-op that I used to be a part of in Vermont, you pay $30 a year, you get 5% off. If you contribute 5 hours per quarter, you get up to 20% off. So it'd probably be something like that, where if you're an aligned citizen, you get 5% off everything. If you're a preferred citizen, you get 10% off of everything. If you're, so on and so forth. So
okay, that's
that
what I was trying, because at some point we're going to be trying to protect our revenue and attendance on these masterminds and on gatherings, and basically we've got different ticket pricing levels.
Yep. I appreciate you calling that out. That's the aligned citizen. The preferred citizen is basically someone who's co-creating with us. They're in Slack, they get an allowance, and the allowance is something they can give away. And that basically becomes the Second Life love machine where we're getting people active. So we're basically giving away a currency that doesn't cost us money to incite people to do things that would cost us money, such as recruiting people into the community, creating, activity. So like keeping people engaged, those things would cost us money, but by giving people our dollars, we prompt them to just do it. And I had an interesting conversation about exactly that with Will of Reddit. So that's a different rabbit hole.
Okay. Cool. Yeah, I'm just trying to get back to how this stuff relates to dollars and cents in US dollars.
Yep. I appreciate all 4 of you going against my crystal language.
Hooray, Yoga Babble.
The defined term for that is opaque yoga babble.
Yeah. TM. When we can manifest the ability to like sarcastically trademark things, that'll be a dangerous rabbit hole.
I think buying a domain name is sufficient. OpaqueYogaBabble.com is already ours.
I just hate that you guys pick all these words that I can't spell. So real quick, guys, this is like, I would love if we could take one piece, because I know there's so many moving pieces in this. It's the vision is incredible.
I would suggest
it's incredible, right? So like, but I know, from my personal experience, when I try to take on building a a holding company for my family, that is much more of a it inhibits my ability to execute versus I'm going to build something to help this type of customer, right? So like, so chunking it down, I think, is important for execution in general, and I think it leads to better results over the short, medium, long term. The vision is important, but I think the vision gets developed too over time with how much you learn in the execution of one or two things. Like,
so here's,
if I was looking,
Jeff, can I?
One second. If I could just finish this. Like, if I was looking at this from the outside perspective and not being a vested member, which I consider myself to be, I would say, well, why don't you just build one or two membership types only? Get those up and running and started, and then add the other layers and currency and all those things. And I'm gonna digress, and that is open to debate, and I'm happy to be wrong.
Okay, so let me jump in, and there's two pieces that are very important, because that is the common wisdom. That is what everyone who has expertise in building things would reasonably say. Yes, 100%. The reason that we fall outside of that is because of Mythos. Mythos enables a kind of communication that allows us to handle many things at once. Sam jumped in on one gatherings. He started documenting in Mythos so that I can jump in and add my feedback, and we can keep those things rolling. That's why all of these things are augmented, so that each of these things that wouldn't otherwise make sense without context can be augmented here. And then again, Brian Bot has the ability to answer questions, to bring someone like Mitch, who's new to the ecosystem, very quickly up to context. And so Mitch is not going to need to understand all of these things. Mitch is going to be like, I want to help out there. And then he's going to go deep on one of those things. That's piece one. Piece two,
which by the way, which essentially solves what I just said. But now you're just putting two citizens in charge of two things, right? Like, so,
right. None of this would be possible without Mythos. Like, none of it. And that wasn't wholly intentional when it was built. The second piece is the resonance share agreement. So the resonance share agreement, John and I have talked about, agreements are the metric. Like, they're the highest metric. So the resonance share agreement is basically, here's my intention, tell me your intention. Our intentions live within this system, which supports a lot of people's intentions, citizens. Here's what we're gonna do. So here's the framework for the resonance share agreement. So basically, what is one in cooperative? What is the background? What is the premise? So Citizen is a belief-driven organization. That can also be individual. Approach, one, and citizens make myths so rich that they tell. This is very, 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 very broad. Alignments, as the royal self, citizens agree to the agreements of one. This is consenting to our system of governance. And then contribution. So when someone clicks on contribution form, it takes them to this form. This form, they get to choose an amount that they're contributing. As soon as they do that, it generates a QuickBooks invoice, sends that through Zapier, they pay it, and then it automatically adds them into the one ledger. Now, this is the thing that gets specified per the organization. So this is what that looks like very simplistically, because it references that larger document, which is referencing a bunch of other memos. We intend to empower citizens to create these resonance share agreements between each other. So immediately our objectives are deploy ONE+ to reduce costs, alleviate human capital, and bolster marketing. That's all that needs to be said about that, because all the context about ONE+ is here. Copywriting and coaching to create digital empathy with augmented communication, same thing. So, and then the longer term intentions, right? One platform, this doesn't exist in any frame. We don't have UX, we don't have anything, but that's a far future thing. So between Mythos, which gives us the ability to not backtrack on each of these stories, right? So 1+ is a story, Spirit Studio is a story, so on and so forth, to be able to not backtrack and consistently build and compound that communication versus consistently say the same thing again and again. That's the first piece. And then the second is being able to create with that documents like this, where we can say, hey, my intention is to unlock you. You currently have a constriction of every time you text your community, it costs you an obnoxious amount of money because you have a very expensive all-in-one system. We have a thing that can get you past that as long as you contribute to our organization such that we can hand that contribution to our developer, pay his hours, and you will get something that's worth $50,000 for $5,000. And they go, okay, cool. They don't need a statement of work. They don't need a legal contract. They don't need a project manager. All of that takes place in the Slack because we're doing it together as one unit versus them hiring us. And so that's kind of the cohesive pitch of why this all makes sense. And then that represents itself in 1+ is a really heavy-handed natural capital investment, because in order to do this, it's basically one of our citizens, Nick, doing all the dev for just this individual or this organization. But we're going to take $5,000 in on this RSA, and then we're going to dedicate Nick to that project for a month. Nick is going to be super happy because he can get that financial capital in. Deepan's going to be super happy because they're going to alleviate human capital and bolster marketing. But it doesn't make sense for us to sell that again because it costs us so much human capital. What does make sense is that we use the Resonance Machine, which is our system for broadcasting to the world with this nonlinear format, to showcase what we've done for our citizen to sell citizenship. So that's another layer of, it's easier for us to sell one thing because of another. And if they were separate, then we would have to have each one survive independently. And if that were the case, 1+ would go raise money from a venture firm, get $3 million to do a dev build of a platform to then hopefully sell it when it's done. So does that adequately compound the shift?
Yeah, I mean, at the end of it, like, you solved it in the beginning for me. So I think I really well thought out, dude. I think I understand why Mythos creates the opportunity to get, multiple benefits from one single project, right?
And
that compounds at scale.
And yeah, and the other thing to be mentioned is that the terms of service that John and I have been writing is such that every non-public memo on Mythos will be a contribution to 1 Inc. because this is a piece of content. This piece of content is something to talk about. That is then a social capital asset for the cooperative. And so everybody who, for example, in the future, highlight this and say, I love that, highlight to comment, you highlight it as the not author, it creates a new memo, you add your feedback on it, you then earn resonance dollars for providing that content, that capital in any frame. So basically, the more people that join to share their perspectives, just as Sam does pretty much every time he's on a call, he's silent, 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 potent question. And that's a contribution because he listens and listens and listens and then says, whoa, what about this? And it's often something that I would never have thought of. And it takes someone standing up and saying, hey, like, maybe this is a stupid question, or maybe you're gonna get mad at me for asking it, but it's something that I need to hear because it's a perspective, and that's a contribution. So the system is very much designed to connect people through this type of communication. None of this would be possible without it. I mean, we would try, but we would fail miserably because you wouldn't be able to communicate. You would turn into WeWork.
I think the challenge, though, in trying to produce a financial forecast is that we need to at least start with the things that we are doing now, and we need to start with projections on the short-term roadmap that we can look at. Okay, so Deepan's going to bring in this much, we're going to have to put out this much to Nick, the end result is we have essentially this asset, the ONE+ platform, which has been developed. Then we can look at, okay, so what can we get for, we're going to use the resonance machine to get X amount a month out of the ONE+ platform.
So yes,
that's how I would go about this kind of process of trying to do financial projection on this.
Right. And so, yes, and that's yes, because I'm thinking of Deepen conveyed that they are, it makes more sense for them to jump into this and contribute $5,000 in financial capital at the end of this month.
Okay.
And so Nick still wants to do the project because he loves to code, he loves to play, he still wants to do it. But they convey that they have to wait. So I as a normal startup founder would say, don't do the thing because they haven't paid us yet. But what I can say, because Sam, you've conveyed an interest in ONE Gatherings, you've already written in Mythos frames for types of gatherings that we could do. Deepen is really good at aligning people in gatherings, and they don't have presently financial capital until the end of the month. So one of my thoughts was, hey, Deepen, would you be willing to contribute social capital to the cooperative, promoting ONE Gatherings, specifically Symposium, such that we can solicit citizens, right? So Deepen promotes our event, which is on their calendar. That enables us to convert people to citizens. And then Nick can continue working because Deepen is essentially contributing one form of capital with a commitment to later contribute another form of capital. And so those types of exchanges between types of capital and between stories on this financial model become possible because of all these things. So yes,
right, this financial model is only speaking in US dollars and cents. It's not
right. And so that's why the aligned citizen, preferred citizen, founding citizen are the things. Those are the memberships where people pay a US dollar amount to be a part of the community.
That's what gives us the cash flow to be able to pay Nick this month.
Yep.
Even though Deepen's money isn't going to come in until next month. That's where we kind of get that little bit of flow.
Right. And so that's I think the question that you and Jeff are both asking is that this for me is the thing to focus on this call. These are the things that John and I determined are the things that are very, very close. You know, this is simulation. I don't want to say A, but this is simulation. This is the top of the simulation. It's up there for a reason. This is the thing we're focusing on. All of this stuff will come in some form later. Maybe the order will change, maybe the volume will change. This is the thing that we're focusing on because this is the thing that is the closest to manifesting in a physical reality.
And that's definitely where we should start.
Right.
So I started a section of, sorry, John, what did you say?
I'd like to send gratitude to Sam for channeling my inner scarcity.
I mean, I appreciate it too, because I feel like that's what I was telling you. I was like, dude, like this is the stuff we're focusing on. You know, so, but that's the thing. This is why I was excited for this call is putting these things down and in sections is what clarifies. So as uncomfortable as spreadsheets and numbers make me, I was very excited for the clarity. Jeff, that little smirk you get, Jeff. I'm gonna give you an $R every time you make that smirk.
Yeah, the meaning we all give to certain stuff is just fun.
Yeah,
I enjoy the glimpses of those. So I created a section called ONE Citizenship. I did align citizens. Maybe you guys can tweak that while I pee.
I still don't have access to the spreadsheet.
I sent it to you in the chat.
Everybody has access.
I don't have it.
I don't have it either, Brian.
I did.
Why do you? Do you know how to access the chat? Look, so from me to everyone.
Oh,
yeah,
Zoom chat.
Look at the screen.
Sorry, Zoom chat is on my Zoom room. Slack chat is on my computer.
Okay, well that's a you problem.
Can I bring up something? What is the process to deport a citizen?
We don't have it yet, so good question.
We're gonna need a deportation process.
I would say, so I actually had, I had someone that needed to not be at symposium. And it was very disheartening because I didn't want to shut him out because that did not feel resonant with one. And after a lot of exploration and asking for feedback, what I kind of came to was probation. And I said, until you're presently on probation, and until other members of our community have conveyed reform, you are on probation. So I would say that there is no deportation from one. There is, this is going to sound terrible, so let's not use this word. Let's not use this phrase after it comes out of my mouth. Alignment camp.
It's actually in the bylaws. It's not fully fleshed out.
I love it. Sam gets up from his computer, walks away.
There is.
I say that I'm Jewish, so I understand how terrible that is. But like, we want to allow people the opportunity to elevate. If someone's in a really negative state, that's why they would be pushed out. So we don't want them to be pushed out because they're negative, because then that creates a division and basically creates the world that we live in. But we do want to offer them a safe opportunity for realigning with truth. Truth being an elevated perspective, which is inherently subjective, but we don't want to kick people out. There is no out. It's either aligned or not aligned.
I picture a weekend retreat where everybody runs off to Joshua Tree for alignment camp for the weekend.
I mean, if it involves mushrooms and walking into the desert, I would sign up for that again in a heartbeat. I believe I already have signed up for that again in 2024 when the next day of not occurs.
I want to quickly chime in here. I just want to say that there's not much for me to say right now, but I'm doing some of the most active listening I've ever done, and you have my full attention.
Well, I appreciate that. And while we're on a break, I have created another clone, and this one will be called the One Financial Model Clone strain.
What is it?
It's my little weed.
Oh, nice.
I feel I feel a lot of pressure from having a money plant and not having previous cultivation success with plants. I feel like I almost don't want to have the plant because it's an omen, but now I have the plant. So I'm like we take it outside to get sunshine every day.
That's good. I have my money tree on my tea table that I water all the time, and people are like, "Why are you doing that?" And it's like, well, if you had a money tree, you would water it too.
I have a money crystal. I clear it and align it more frequently.
It's surprising how easy it is. You just I can pull off a sprig from very low on another plant and stick it in dirt and give it water and it grows. I mean, it is the easiest.
That's you're saying that on a Zoom chat where your video is washed out from how much sunshine that room gets.
Is this a metaphor for how you do business, John?
What's that?
Is that a metaphor for how you do business? That you can just take a small portion and just like stick it in the ground and it grows?
Yeah.
That's the idea.
I'm down.
Fertile ground. Okay, Jeff, you told us to do something that we didn't do while you were here.
No, I'm just making the sections for aligned, preferred, and founding citizens.
Okay. So aligned is basically like, I see aligned as like, this is cool. I like this. And I see preferred as Mitch's comment of like, yeah, you have my attention. So, Mitch, are you going to come back to another symposium?
Absolutely.
So like that enthusiasm, however you define it, is like a preferred citizen. So the intention is to all the people who are presently in Citizens of One are people who joined the thing before they knew what it was, before we knew what it was. And so as soon as the paywall goes up, then everyone's going to pay with either financial capital or something else. And so basically like we'll let someone in, someone like, Nick is a brilliant coder. Nick might not have the ability to pay, $100+ a month, but like an hour of Nick's time is well worth that to us, if not more. So, hey, Nick, as long as you contribute an hour of natural capital per month, then that will be your preferred. That's our RSA with you, is that you contribute an hour of work per month to maintain your citizenship. And one of the things that I'm basically is developed in my mind, I just have to plug the things together, is an Airtable form that's basically time logging. And so you report your hours and say, I am the citizen, this is my email address, I am the citizen, I'm reporting these hours. And then that goes into a queue to be approved. And then once approved, it gets added to the ledger. And so essentially every month we have the ability to bill people our dollars for citizenships, and they can pay for those citizenships in multiple types of capital. And that's granted, it's super janky because it's an Airtable and it takes a lot of management. So I would love some help on that, Sam. But that is the economy that we are birthing.
Jeff, I'm just fixing aligned citizens to represent it's $30 annually.
Oh yeah, change it all. I just copied and pasted the membership section or the mastermind section, so I'm gonna zero
Just
that.
to,
I also, this is the ecosystem. So I created this view. This is going to be a public view. So this is the live feed of contributions. Every time someone makes a contribution, this is the simplified version. So the admin version, the citizen ID is someone's email. So basically, as long as you maintain access to that email, that's your account, and that's how much you own. Here are all of those IDs, and you have the total contributions, which there's a lot that's not chronicled in here because the system was not what it is now. And then you have the public registry. So this is basically, okay, cool, here's the citizen, here's their memo, here's their balance, and here are their badges. And when you click this, you get to my memo of John. So then as we start to build these out, my memo of Jeff, my memo of Sam, my memo of Mitch, so on and so forth, this registry becomes very alluring to having someone want to be on it. Oh shit, like John is, or Brian is driving a lot of traffic and attention towards John. And this is beautiful. Like, I want a memo like this. That this is built to make people see the value in preferred citizenship, which is essentially being in that, being showcased in the ledger. Founding citizen is like a Twitter verified badge in that same system. And then if you go down to income statement, the one context, which it seems like you may have moved it, Jeff.
One what?
One context.
Is it under?
It was here.
Here it is. Yeah, I just grouped them all away in sections.
So one context is basically an interview format where, like, if I were to deliver one context, I would interview a new citizen on the live stream, and then in doing so would create a very cohesive and fondly framed memo like the one that I have for John.
And what do we charge for that service?
Haven't decided yet, but 500 to 1,000. Probably 500 to start, and then we raise it as we start to get a waiting list.
Okay, and we think we're going to do that for, is that include it? Do we include that in signing up as a preferred citizen?
No, I would say we include it as a founding citizen.
Okay.
And the intention is, as soon as the paywall goes up, everyone who's in is a founding citizen and everyone else is not. And if someone wants to become a founding citizen, which I've joked is like buying a Tesla Roadster to show everybody that you had the first Tesla Roadster, then it will probably be somewhere in the $11,000 range. And so becoming a founding citizen for anyone who's not presently in it, and we'll say, all right, we have 111 founding citizenships left now that we have officially founded, and those are each $11,000.
Okay.
And then a preferred member would be everything beyond that, and we can obviously build new citizen. The intention is to have like Foursquare badges, so basically merit badges. And so if someone is, symposium attendee times 50, they get a specific merit badge. If someone is a community share investor, then they get an investor badge, and so on and so forth. And so the intention is to make space for people it's a potlatch society where your status is based on how much you give, not how much you own. So basically badging based on giving. And so everything, in my mind, everything in this financial model is a frame of giving to receive to receive merit.
Right. So looking at so we were talking about the service, what was the name of the service?
One context.
Oh, the what?
One context.
The one context service. So that's something that we charge $500 for.
Yep.
And how many times are we going to be doing that a month?
My expectation is that we charge $500 for the first 5. Who's Andrew Howe? Andrew Zhao. Anyone? No idea who just created an account. That's awesome. Someone in Portland just created a Mythos account.
So Portland, really interesting.
Andrew Zhao. So the intention, Sam, is to sell it a few times. I already have. So honestly, now that I'm thinking about it, now that you're asking the question, we could probably raise that price to like 2,500 because
from 500.
From 500, because what I realized in saying it to you is that it's easier for me to write about someone like this when I'm interviewing them.
Right.
And if I'm interviewing them, I might as well live stream. And if I'm live streaming, then that is publicity. So we can charge a little bit of money for both the publicity and the copywriting work in the beginning. And as we build our audience, the publicity is worth more than the copywriting.
Okay, so getting back to the dollars and cents of this.
Right.
The first few are going to be $500, and we're going to get that done in April?
Reframing a little bit, and you're helping me to clarify it, is that who is doing the interviewing and who is doing the writing changes the price. And once that's done, the one context, like every time I invite someone to meet John at Symposium, I use this. Every time I send out an email talking about John, I use this. Right. So the next step is the resonance machine, which is like Deepen is raising money. So if I create a really fond memo about this founder of Deepen, then I can much more effectively solicit investor meetings for Deepen by sending emails. So one context will start low, and for me personally, me providing that service will start low and increase once people begin to understand what the service is. So kind of like how, every iTunes was begging musicians to be in their commercials, and now musicians are begging iTunes to let them. So that similar model. And then once the context exists, they're going to want people to see it. So then it's like, hey, pay for me to send emails on your behalf.
Right. Well, I'm sold on the service. What I'm trying to figure out is my
intention is to sell it at a price and then continue to raise the price until people stop buying.
Okay. So we think that's going to start at 500 and then quickly increase to somewhere around 2,500.
Correct. And as soon as the New York Times feature comes out in 1 to 2 months, that will obviously raise the price. Right. As soon as our community grows in anything, like that raises the price. So because then that's a natural capital thing that takes my actual time. But I can get assistance from a copywriter at scale. We can have other writers at scale, so on and so forth. So
for sure.
And I don't know how to document. I don't know how to document a flexible price based on influence of social capital, but yeah.
Well, and I mean, we need to make projections,
right?
Even though we know that they could be off,
right?
So showing that it's going to be an increasing price that eventually levels out or plateaus, and it's going to do that over the course of the next 6 months.
So Jeff, can I pass back to you, because you asked me in the show 1 modeling call you asked me about like how much we would charge for having people on the show. So we had at the beginning, it would be paid guests and free guests, people that we invited on and people that we were like, hey, you can come on if you make a contribution. Same thing here. So let's say that one context starts at $500 in March, and there's 3 that are available. 1 is already taken. And then in April, let's say there's 10 and it's 1,000 and so on and so forth. That will be influenced by the key metrics up here, because the more friends of residents, AKA subscribers we have, the more value this is going to have. So I'll pass back to you for asking those questions in the way that you did previously.
Yeah, I mean, it seems like it sounds like you have a capacity issue, and then you would just layer on your capacity, and then grow the value of it over time. I'm less concerned with defining that, and I'm more concerned that I would rather us finish the 3 citizen levels, because that sounded like the main focus before. That sounds like an ancillary add-on. That we may be able to throw a percentage in, in $1 per, after the fact. But again, that opportunity probably doesn't exist unless we're growing the members, the citizens.
Well, the opportunity exists because I'm presently delivering that as a service, but it doesn't make sense. It's more energy in than energy out at the present moment. So let's focus on this, because that's minor energy and major energy out.
Yep, and it seems like John's starting to put together some of the assumptions. But I would urge us to nail those down to the best of our ability. Like aligned citizens, how many are we going to add a month?
There's another couple little things I changed while you guys were all talking.
Okay.
I would urge us to complete these 3 sections, and then before we get into the other stuff. But
let's hear from John for a second, then let's jump into that.
All right. So what you've got here at the top, Jeff? Who's got the screen?
Oh, sorry, King.
How did you stop peeing?
I held it.
So Jeff, so aligned citizens and preferred citizens, those are purchases of residence dollars, and those are worker members. Founding citizens are buying community investor shares, and somehow we got to limit this to.
Where did that happen? That wasn't my intention to have the founding citizens be purchasing investor shares.
Okay, well then there needs to be one more category for people who are buying community investor shares.
Yeah, I think I added that in and took that out for some reason. Please re-add that.
So now it's added. You can just rename this section. This is community investor shares sold.
Wait, John, I thought we're doing income like P&L projections. Or are we also trying to take this into cash flow at a certain point?
100%. We need to manage the cash flow.
Okay.
So there's the balance sheet. I just put this on the balance sheet. Community investor shares sold. I think there should be a certain number we're trying to sell, like $1 million worth, and maybe they're at $11,000 a pop. However you want to think about it. There are revenue line items, and then there are basically the purchase of community investor shares.
Yeah.
Right.
So the community, I just want to clarify, the community investor shares are very, very different from the founding citizenships.
Okay.
It's just different thing.
Okay, that's fine. And then all we have to do is take this, insert below, copy this, and change this one to founding citizens.
Founding citizens? Or did you mean fondling citizens?
Is that what happens at alignment?
Not that kind of cult.
I think all of them start out as not that kind.
I don't think founding citizens have recurring I don't think they're paying it on a recurring basis, and
No,
that's why
it's a
my logic for thinking that founding citizens, why I changed founding citizens community investor shares, but now I've changed it back, so they're separate things.
yeah.
But I don't think founding citizens are going to be paying $11,000 a year, you know?
No, so the intention is, and let me clarify, the intention is that there's a finite number of founding citizenships, and those founding citizenships are a one-time payment of $11,000.
That logically, from a financial perspective, that just that frame caused me to think of it differently than the recurring nature of preferred citizenship. And that's why I changed it.
Gotcha. So then let's say that a founding citizen. Okay, so I appreciate that prompt. So a founding citizen is basically a status that we only give away so many. It's whoever is presently in and 111 people more. And then after those go away, what would come above the preferred citizen would be something like, I don't know if the name, but a premier citizen, which would be something like $11,000 a month. And those people would be the people who would be, you know, John a year ago, where you're like, I want coaching, I want PR, I want support with my portfolio companies, and so so we can add that as well, but I feel like those would begin to be sold around June-ish. So the intention is to sell out of founding citizenships within between April and July, and then begin selling name and progress premier citizenships July onward. I'm getting silence from all the people who understand money. Is that a bad thing?
So if we do 2020, 2020,
yeah.
This would have us selling 111 by the end of August.
Okay. I would do like 11.
Is this revenue?
This is quantity.
John, is this revenue?
Which one?
Founding citizens?
So the
yes, it's revenue.
Okay, so let's just define this in general. So that's why I'm taking a second. So if it's revenue, they're purchasing residence dollars. So it's
correct.
So anything that you want to be revenue is the purchase of residence dollars. And the only row 45 and below is the calculation of selling community investor shares.
Yeah. And Sam, I would correct that. I would imagine that.
And the idea is
April we sell 10, May we sell 40, like, because it's going to go like that.
And then there's the aspect of this that goes onto the balance sheet, Sam, is that Brian has stated the intention to raise $1 million and use 250,000 of that to acquire Mythos One and etc. So that's the raise $1 million is the sale of community investor shares.
Okay, which is something else that's just a different topic for discussion when we look more at cash flow, I think. Because
effectively though, so yes in a frame, in your frame, no in my frame, because it's still a metric and a pipeline. It just so happens that money the money from our dollar sales gets deposited in revenue, and the money from community investor shares gets deposited on the balance sheet.
Right, I'm more talking about the cash flow aspect of paying out the dividend on it.
And that is in the future.
Right.
And so back to yes, and I would say that the intention between now and July is to sell 111 founding citizenships for net profit of $341,000, to solicit $1 million of community investor shares to make the acquisition of Mythos, and then to also begin selling preferred and aligned citizenships. So aligned citizenships is basically it's $30 per year, not per month. Oh, okay, yep. And then basically this is just to get people on our email list, but making them pay to do it. And then this is to get people to contribute in Slack and essentially be very present, as present of a listener as Mitch has been thus far. Part of that is that every time I go live on the live stream, it automatically takes the title of the live stream and puts it into the Slack channel that is relevant, so people can see the work happening on each individual project, which helps Jeff with what you said of keeping that progress. But yeah, I mean, $340,000 in profit, then $1 million in revenue to make that acquisition and start doing dev. And then by that time, these should kick up into being something that is self-sustaining and self-growing. So that's I feel that this represents my feeling of the future.
Okay. I unfortunately have a hard stop at 11, but I think we're making good progress.
John, what would you like to get done in the next 15 minutes before your hard stop?
I think a discussion of the assumptions for how many of these will sell over what period of time.
I think the New York Times piece is going to drop in about April. March. March is when I'm doing all of the actual work to make it so that people can make these purchases, like, you know, Stripe buttons and all that shit. So everyone that is presently in is a founding citizen by default. They're not paying the money, but they're getting the status because they were present before it existed. April, that will drop, and the expectation is that the available founding citizenships will have significant value, and will probably sell very quickly. So I would say that this is a conservative forecast, because my expectation is that they're going to not sell, completely sell. And so when they sell, they're all going to go. From a preferred citizen standpoint, Symposium, John, you saw the difference in energy between last Monday and every previous. So basically my work now is converting those people into, hey, come and do the digital space version of that, and then start showing up on calls as Sam and Mitch are. That the two of you being on this call is a representation of that energy in my mind. So I think that preferred citizens will start to convert very quickly. I would say that 5 per month in April is, I would say we up that, because I think that that's far too conservative. I would say 10 minimum, and then that increases. So like 10 the first month, then 20, then 30, and so on and so forth. And I think, again, that linear progression is still conservative, because I see it going like this. And I see it being not a hockey stick, but like an escalation. As far as aligned citizens, I think that I'm less concerned about this. This is, for me, this is largely symbolic.
Don't you think the majority of our citizens are going to be aligned citizens and not preferred citizens? I mean, at some point, like an 80-20 rule in there?
Yeah, and yes. And I think that aligned citizens, it's like, you know, if we have a list of, 20,000 people that are aligned citizens, and then we have 1,000 people in Slack that are preferred citizens, and those people are in Slack because they've paid to be there, or because they're paying with financial capital, or they're paying with a different form of capital. So Sam, you would be paying with natural capital by, showing up at Symposium and orchestrating Dina. That is capital that is being contributed, that is more than worth $111 a month. And the difference between now and once this represents itself is that we actually put it in the ledger. And the reason that it hasn't been in the ledger is because the ledger was a time consumptive process for me to do. But now that we have this frame and we have the thing that I talked about previously, where you can submit hours and basically like say, hey, I did this work, this is my contribution. And that's what I've been kind of training people on with Symposium, is that all you have to do is fill out the form. And I say, yep, yeah, you absolutely did do that. Cool, you're in the ledger. And then if someone at the end of the month has not contributed, but is in the Slack, we're like, hey, what's up? What's your contribution? So that process is for preferred citizens. We'll have more people as aligned citizens, and then those people will be emailing out on a regular basis to say, hey, we're doing this event. Should Brian and Chantel's wedding be a community event such that Brian and Chantel's parents take what they would pay for Brian and Chantel's wedding and they buy our dollars as a contribution to the Union Retreat by One gatherings in Malibu in November of 2020. And it will be a week of programmings for yoga and transformation and gatherings, all for the purpose of Brian and Chantel getting married, but also to solicit ticket sales for people to come to these events and participate, because there's value there. So then we'd put that to a vote and say, here's the memo for the retreat. Here's the frame. It is so to Brian and Chantel's wedding. Does everybody consent that this is a contribution to one? And then we ask 20,000 people, is this okay? And they say yes, and then we do it. So they would be participating largely by granular voting, versus preferred citizens are participating by what you just did, which is asking a very intelligent question, which requires a very intelligent answer. If we have 20,000 people all chattering in Slack, that would not work. So having that barrier of like, these are the people that are actively contributing on a regular basis, either through financial or natural or other capital. Yeah, so does that answer the question, kind of painting the picture?
Yeah, kind of. It still doesn't quite translate to me in terms of like, again, trying to get this back to dollars and cents.
So what translates? Or Jeff, can you translate that? Because the way that I see it is like a compounding progression of acquisitions of new members, both in aligned and preferred.
But right now, our aligned and preferred membership growth is pretty much the same.
Right. So can someone change this? Because I don't know how to write a formula. So add a compounding increase.
For
so
aligned?
You could, yeah. So do 5, 10, 20, 40, something compounding.
So let me just in the
Let's
last
do 50, 100 here or something like that, and then let's do the same progression but a lower amount. Go ahead, John.
So in the last few minutes that I have, I'd just like to thank Jeff, if you could kind of get the assumptions you need to flesh this out, and then make sure you and Brian are aligned on it, and Mitch and Sam have had their input, right? Then this would get to a point where this is we're trying to hit these goals. So I laid out. You can see what I did for community investor shares. I'm just going to call them units at $25,000, and then we're going to sell some units until we get to 1 million.
Yep.
Okay. So I think this is generally. I think that part you're doing there is great. And then Jeff, if you can build in a, just like a high and low scenario for different things, I think that'll make a lot of sense. I'm gonna hop off now though, because I have to take care of some things before the meeting.
Okay.
Thank you guys.
Good. Thank you, John.
Thanks, John.
Yeah.
Jeff, I would say more compounding, 50, 100, 200, 400. Here we don't exist, and here we've been featured by the New York Times.
Okay.
And I mean, this is going to be mostly an online community. I don't think we're going to achieve this kind of growth in the LA area.
Correct.
I had a question. Is there any concept of referrals happening here in compensation?
There is space for it. It is the intention. There is a social capital reward mechanism that is presently built. This is kind of assuming that factor. So yes. Does that answer the question? So
yeah,
yes, I think is a short version.
Yeah. I mean, I figure there's obviously like a word of mouth component, but right. I was wondering if there was a discrete reward mechanism in place in some fashion.
Yeah, so it's largely, it exists functionally, but not well presently. There's a byline which you filled out in the application, which is Brian and John. Now, when you fill out your application, I received an email and it said Brian and John. I manually went into the database, which is now, I'm redirecting where that goes, and said lead from, like referred by. But I had to find John, and I obviously knew who John was, but at scale, that might create issues. And we are presently looking at an ID system that doesn't rely on emails. But that's where the dev budget comes in for Mythos. And so I think that this is pretty conservative. I think that with what we've got going in April and May, I think that we can bring in $1 million in June. But I'll allow John to have this conservative because that's still cool. So yes, everything is largely limited by the the natural capital that is required in the interim to developing the automated mechanisms. So Jeff, 50, 100, 200, 400, 800, 1600, and so on and so forth. Let's assume some kind of progression there, and then let's do the same thing here, starting at 5.
So same thing where you're doubling, or you're just growing by a percentage, like 10%.
Because of what Mitch said, and because of the way that, I mean, again, I've spent 10 years doing growth hacking, like this is designed for that purpose. So a linear progression does not make sense. It's designed for a compounding progression. So whether that be a 2x every month, or I mean, I think that 2x month over month is midway, not conservative, not aggressive. I think that's mid-range. What I think would be likely is that we do 50, 100, 20,000, 5,000, or something like that. In everything that I've ever done before, it's not a smooth progression like this. It's like boom. And you can see that basically every time I get a spike of traffic from Reddit, that's what happens.
Okay.
So but that's a guess, right? So I wouldn't put that into the model, because that's like when that thing happens where we get some viral traffic, which could be April when the New York Times things drops, then we'll get a spike like that. So I would say, to be conservative, it's a 2x compounding month over month.
But if I mean, at some point we could say that it's a realistic goal that we're going to have some sort of, we'll call it a viral event. We'll have that once a quarter.
Yes. I would say that's a reasonable expectation.
Okay. So I guess yeah, I don't know if I would model that. I mean, like at the end of the day, it doesn't matter to accomplish the goals that we've set out. Like it's not going to go 200% forever, right? So, or I mean, is it? I mean, I guess I don't know how to help lead this part of the discussion. Like I'm actually happy if you guys just type in what numbers you think for the next year, and then we just use some little growth factor after that. Because like,
I mean, this is the thing that I didn't know how to do, but this is also, I mean, this is where I feel uncomfortable because John wants a model, and what we all agree is that this could be I feel like 50 people at $30 per year is extraordinarily reasonable, all things considered. But what is likely is that New York Times feature drops end of March, early April. This could be 5,000. That could be 200. This could be 500,000. That could be 100,000. This might not be 1 million, but like that's modeling these things is extraordinarily difficult because everything that we have to compare it to. If you look at Second Life,
well, I don't think that's the goal, right? Like the goal, I mean, let's just be thrilled when the spikes happen. I don't think and you can put in a little spike it doesn't.
But I would say that 200%. If you average the spikes, I would say that 200% is conservative.
Over the
200% month over month.
How long?
The first 3 years.
So you think April 2021 to May 2021, we're gonna pick up 400,000 members?
Reddit has 542 million users, and we have the #1 contributor and the head of brand strategy are presently our citizens.
Okay.
And the head of brand strategy for Reddit is going to be the focus of the New York Times piece. Every single other person that she interviewed for that piece is a citizen of one.
Okay, so you said how many users did you say Reddit had?
542 million monthly unique users.
Okay, so based on this, at the end of January 21, we pick up 52 million new users. That's 10% of all Reddit users.
No, dude, there'd be a limiter. I'm only focused on 2020.
Okay.
I can throw in a limiter that says, okay, let's always cap out at 75,000.
Let's cap out at 100. Yeah, sure, that works.
And we can.
So I mean, yes. Wait, this is number in the month.
Yeah.
This is new citizens every month is line 13.
Okay, so then let's cap the two. Let's say 200% growth year 1, 125% year 2, and then something like that. Again, I'm guessing because guessing a growth.
Listen, John, just to be clear, John wants this financial model for April through August, right? I would assume. He didn't explicitly say that to me, but that is my assumption. Because when we start getting traffic, I'm going to go pull traffic stats and the conversion rates of those pages, and we'll have real data to go manipulate and model out. And then we can model out the spikes in traffic. So I think we're accomplishing the goal, even with just what we've done right here. So, and I don't think we need to know any of those other things. I think what this says is that the opportunity that, if you're growing the community of aligned citizens at, and you get up to 25,000, you're producing more revenue than we would even know what to do, more cash flow, and than we would even know how to spend right now, right?
Thankfully, the citizens would help us
$2.5 million in revenue this year under this model. Under this model, we're producing $2.5 million in revenue this year.
Well, that doesn't factor how much of this is going to be spent on the acquisition of Mythos, and that doesn't factor any of the development. The intention is that of this million, 250,000 is going to be for the purchase of Mythos, which is going to essentially clear out my dev debt and also acquire all property. So everything Mythos moves into one, including all the content, which is then owned by the terms of service. So that move, and then the other 750 is slated for bringing humans into the frame to work full-time on dev. So This is essentially already spent, but we haven't factored that into our expenses.
No, I'm just talking about money coming in. We haven't factored any expenses in. So between what we have modeled for citizens and the $1 million in revenue, and the $1 million in investor shares, comes out to 3,400,000.
Right.
Cash in.
Yeah. And that doesn't include
That doesn't include
really
any cash out.
any of this stuff.
Right.
Right.
That's just cash in with minimal with current operations, essentially.
Right. Yes. Is there a question attached to it, or you're just?
I'm just pointing out what this is. If we're looking at this for the rest of the year, we're talking about bringing in 2.4. We're talking about bringing in $3.5 million.
Does that sound unbelievable to you, or you keep stating the same thing but not asking a question?
The skeptic in me is triggered by this.
I would call your attention to the humans that you met on Monday night. I would call your attention to the New York Times and featuring those people as members of our community.
Right.
I would call your attention to the decades of experience that John has, the decade of experience that I have, the decade of experience that Jeff has.
Yep.
And I could go down that list for a very long time, and you know those people. So
Sure.
I hear you.
The beauty about this too is like your belief grows over time. And
Right.
what that means is like I am skeptical too, but I'm naturally skeptical of every business model that I put together that it starts from scratch. I call it getting rich on a spreadsheet. I bought the domain at one point. Like it is what it is. Like
Right.
what I think is the point of this exercise is, hey, we have a plan. Like come April, let's layer in actuals and let's see how we're doing and like see where we need to tweak and go from there. And frankly, like, I've already seen I've had some fun recently clicking through, Mythos articles. The attention grabbing nature of all of this is fascinating. I certainly want to believe in these numbers. I think they are aggressive, but I don't have any context of whether or not they're right or wrong. We're going to learn is the point. So come April, when we pull traffic and, and the measurement of the, of the new members and, I connect Stripe and, we start to feel it, it'll only excite us to increase traffic and virility and all those things and create more value for the members. And, like that stuff's exciting. So I think this is good. Are you guys good if we pause here and come back?
Definitely.
Are we good enough kind of on those three sections for at least the 4 months?
Should we add a line for expenses? I feel like that's necessary.
Then I'm sorry. I've got a 1:30 I got to prep for.
Gotcha.
I think that
can we come back and do that?
Let me pause that. Let me retract that question and ask Jeff. Jeff, you had a prior call with John about this call. I know the loose frame of what was discussed on that call. So can you tell me what do you feel?
That you may know more about that than me.
Do you feel that this is something that appeases John's frame?
I would assume so, because it basically says that, you're generating $6,500 in April.
Right.
And then 13,000 in May.
6,500?
6,500. No, 6,500.
That's okay. Yeah, that's
founding citizens. I'm sorry, that's attached to the balance sheet. I gotta layer that in. Is that really true? Is that we're gonna produce
we're going to produce 6,500. Look, it's line 98, just total income.
No, I know, but then there's this line 43. Is that real? Like, Are we depending on that?
Yeah, that's not.
I think that this, for me, this number in April feels mildly aggressive. So I would say start this at 5 and compound it by 200%.
Wait, for which one? You're talking about founding citizens?
Yeah.
Founding citizens, there's 111 of them.
Right. So I'd say like 5. I think that it's going to take 4 months to sell 111. I don't know the structure in which they're going to sell, but I think 4 months, 111 at $11,000 a piece is totally reasonable. I don't know if it's going to be 111 in April. That's 5 months, so I would take that out. But I would say that like we're going to sell all 111 by the end of July, be it 111 in April or 5, 10, 80.
What is this? This is
16.
Yeah. Cool. And then I'm just gonna throw this in the balance sheet.
No, that's income. That's not investment. That needs a line at like 67.
John took that out. But yeah, I'll put it in, but that's confusing. John must have taken it out.
But I think that's when he originally thought founding citizens were community investors.
Okay. Frustrating. Okay. I mean, that's $60,000 in April.
Yeah, that sounds
Cool.
likely. Cool. Does this not change, or does that?
You're gonna bring in does not what not
There we
change?
go. No, there we go. Okay, cool. That I was looking at March.
Jeff?
Yeah.
That stuff that you just added for advertising and Brian on 126 and 127?
I just added that.
Okay. You added that stuff on the balance sheet and not under expenses.
Okay. I was got it. Thank you, Sam.
No problem. On an unrelated note, I apologize just because I know Jeff's got to get going soon. Jeff, are we confirmed tomorrow?
No, we never grabbed the time. What time do you want to do that?
You had suggested 1 p.m. and I said that worked.
1 p.m. Pacific?
Central.
Central, yeah, good. That's much better. Okay. Cool. I will send you an invite.
Thank you. And is there a better way to communicate with you other than through Slack?
No, nope. There's no other way to communicate with Jeff besides Slack.
I'll ask you again tomorrow.
Is that
I think Sam, you can make beautiful space for Jeff in Slack, and he will have a radical change and energetic opinion thereof.
I don't do beautiful space.
All space around you is beautiful, so I tend to disagree.
Aw, you're such a sweetheart. Cool. I think this was productive.
Agreed. I think we have a lot to get through, but this is a solid foundation.
Yep. So next week?
Yeah, I think, Jeff, I want to cap this at, I want to cap all expenses at $10,000 a month through March.
say that again?
I want to cap all expenses at $10,000 a month through March.
Put 10,000.
Well, so like advertise, like, I mean, this is from show one, so that we can remove, but like advertising, marketing, like literally the only expense we have, if we batch all expenses into one expense, is my income and allowance.
Oh, is that what you
presently
put in row 125?
Yeah, so it's presently like my income / allowance, like that whole is $10,000 a month, and about half of that is personal expenses, and about half of that is like software and shit to make stuff. But it's just a very solid number, and we have that coming in from John until the end of March. So then that makes the first 3 months accurate.
You mean, oh, you just want that?
Yeah, we have 10 in from community share investors every month. So it's like 10, and 10.
Yeah, that
like
stuff's not tied, I don't think, right now.
That's not what?
It's not tied to the balance sheet.
Okay. Well, so this is because we're deciding that everything that John's put in will become a community investor share. And John is continuing to do that until the end of March. And then the expenses until the end of March are $10,000 a month. And then they will start to increase with the revenue.
Okay.
But I mean, I think we all know that. So
I'll probably clean up the expenses in the balance sheet based on everything I know. But yeah, I probably won't do that right now. Let's I think we're good just on that revenue piece, and then we'll tweak the rest.
Okay. Awesome. Thank you all so much for participating with questions, actions, listening, energy, all that jazz. I'm
MVP.
Say it again.
Mitch is definitely the MVP for this call.
Yeah, and this aligns for me personally, from my perspective, this aligns 8+ years of talking about what I want to do in my life into rows, and knowing that it's this format and this simple means that all three of you are like, cool, that makes sense, let's do that. Versus, years ago, it pie in the sky, like, it'd be like selling this, we're going to change the world. And like, it's very hard to maintain alignment of that grand of a vision. But now with all the work that we've done over the last, time, now we're aligned. We understand what we can do. We understand how each of us plays that part and can jump in and solicit others and explain the story to others. Like this is a very important piece in making all of what we've talked about become tangibly real.
In closing, because I always have to finish with some interesting question. Looking at what you've talked about as far as projecting our growth, if we continue growing the way that you expect this to, I'm wondering if raising the $1 million early like this is a good idea. That $1 million will not be much a year from now if we grow the way that you want it to.
So I hear what you're saying. It's because it exists in the sheet does not mean that it is definitely happening. One scenario is New York Times prompts a ton of purchase of residence dollars and we give up no community investor shares. Another scenario is that we raise community investor shares. Regardless, the definitive plan is that Mythos 1, in regards to technology, human capital, and intellectual property, is being purchased by One Inc. and developed.
Yes.
So the stuff that's not on this balance sheet is my debt. So basically my expenses from building what we have today. And Mythos 1 was named Mythos 1 because in 2017, I thought it would be really funny to someday issue a press release that said Mythos is becoming one. And we have a cooperative called One Inc. Cooperative. So that it was built for that purpose.
Right.
So at some point in time, that acquisition will be made wholly, which will basically be an acqui-hire and technology acquisition, and so on and so forth. In some frame
where I don't know all the details behind that, but I would be wondering if there's a way that One Inc. can work out a payment schedule for that doesn't require the sale of percentage of percentage.
I hear you and I understand why you're asking, and I would say that where we are is definitive. Where we're going is definitive. How we get there is variable.
Right.
That
totally makes sense.
That's the thing that I kind of push back on John, is he wants to do scenario analysis. And I'm like, we could model 50 very reasonable scenarios and still only model a few. And so the things we know, yes, that is a very clever and simple and elegant and obvious way that we could do a thing if these numbers are conservative and become true. If they are accurate and they become true, same. If someone comes to us tomorrow and offers us $1 million, it would be more worthwhile to have that going into April, but chances are it would take time to negotiate that. So it wouldn't have so all of those things are variable, and yes, they do make sense. And so my habit is touching lightly on those things and saying, yes, that makes sense. That is a thing that we could do. Definitive, in between, like, I don't think I've ever disagreed with anything that you've proposed, because it's always like a good suggestion. We just don't know which suggestion is the right one until the time comes, but that's kind of what we've been doing today, is modeling.
Right. Well, and I guess it gets back down to a little bit more of even just like a philosophical question, in that we are a worker-owned co-op, but if we're only 51% worker-owned, like, do we want to be a 51% worker-owned co-op, or do we want to be 100% worker-owned co-op? And there's a big difference there.
I think that here's where we are. Yeah, so here's where we are now, and here's where we're going later.
Right.
The fact that we are a co-op is 3 weeks old.
Yes.
The knowledge that we are we have the ability to sell up to legally sell up to 49% equity. That fact, that manifestation is 2 weeks old.
Right.
So the answer to your question, oh no, we haven't had that conversation yet, because we've only had that frame for 2 weeks.
Right.
So this is a first step in getting to the point where collectively we can answer that question. And so I'm pushing it to whenever it makes sense to answer, but that's certainly not now. I hear you. That's a great question. And yes, that's on my mind as well. We have no way of knowing the answer to that question. That will be something that we poll the citizens. Presently, I'm working on building the technical ability to poll the citizens, and the technical ability for people to become citizens without me clicking buttons. Once those two things are done, we might have a clearer answer on what that will look like. But presently, we're doing that work. Present in the work.
For sure. And I hope you don't. I hope you're not interpreting these as attacks. This is more just
no. I mean, that's how we got here. Is John asking me questions that could be in a frame uncomfortable, but the fact that you're asking them is a contribution, because we need to have answers to those questions, and those are the types of questions that I'm answering in Mythos, because they will be asked again. And when the answer changes, we update the memo.
Cool.
So John and I are putting the bylaws, the articles of incorporation, the terms of service onto the website. Those will be available at a link, and then at the top of those, there'll be a Google Drive or Google Doc link, so that people can comment on the next version. And then basically we'll have a live stream to discuss new versions. Those versions will then be pushed to the website, augmented with the memos of board members. So the process is going to be iterative in that fashion.
Right. Okay, cool.
Sweet. All right, I'm going to jump into this task, which is making a button. I don't know if you guys have looked, but I just did a total revamp of the Citizens of One site. So now we have corporation, governance, technology, and community. These link to various places, changed the frame to the cooperative, added a new logo, added a join button so that people can get eager and jump through. Citizens, I will soon have the table of citizens that will load below that to see all citizens, and a few more things that are soon to be added. But essentially the join, I'm going to make the survey shorter, and I'm going to get people to, the survey terminates here, which is like join the Slack. So this is the page that I'm changing to represent as choose your membership.
Cool.
So cool. Next steps in manifesting.
Hooray.
Cool. All right, guys.
All right. Farewell. Talk to you all soon. Thank you so much. And I will post this on the YouTubes later.
Great. Thanks.
Yeah.
See you tomorrow, Jeff.
See you guys.
Bye.